What's going on, chat? It's your boy Jordan. It's gonna be like I guess the first video. I'm just gonna be teaching you guys some concepts and just how I go about trading. I'm just gonna try to teach some concepts, and yeah, I hope this is good because I'm gonna be in a Discord call so I could, drop the videos, drop the sauce. If there's questions, you guys can comment, hit me in the Discord, anything. Um, if anybody has any of my socials, literally just hit me. It doesn't even matter for Gmail or anything. I'm tapped in with everything. Twitter, Snap. Oh shit, definitely not on Snapchat. But and other than that, so Instagram, TikTok, whatever. Just hit me. I'll send it to you. It's free until February 1st. So about like a little bit less than 2 weeks. But today we're going over the importance of time, the difference between a 4 hour, 1 hour, 30 minute, 5 minute, 15 minute, 1 minute, 3 minute, 2 minute, 30 second, all of that. Everything. We are going to go over literally just the overall. Let me open the charts. Let me open the charts. My fault. Let me lock in, bro. Let me lock in. Hold on. Let me lock in. Oh shit. Hold on. Yep. Oh. There you go. Yes, sir, boy. Yes, sir, boy. Alright, let me lock in. Alright. So, Jordan, what am I looking at? This is what you are looking at. You are looking at a downtrend. And if you do not know what a downtrend is and an uptrend is, go watch CJR's bootcamp, or hopefully I go over all these concepts in the future. But honestly, I'm trying to drop crazy sauce because I'm doing this shit for free. And none of these other people are doing all this sauce for free. Everyone's charging for it. And I don't see why we should be charging for it. So that's just me. So whoever's tapped in, you're so lucky. But all right. So let's say we're in a downtrend. With a downtrend, we make lower highs, as seen right here, because this is the first high, so it'd be a lower high, and then lower lows. So low, and then low. So the down move, the arrow is just a little bit exaggerated just to emphasize the point and the entry in the model that I pretty much use. So let's say we are in a downtrend, right? And we see that we have a draw right here, this white line right here. Say it's like a hourly untapped gap, hourly high or low, literally anything that you want to target on your trade. Anything has to be a conviction. You have to have conviction. You're like, oh yeah, I could see this getting hit because we're in a downtrend. So where are we going to, expand to? Because we're making higher, lower lows and lower highs. Where are we going? You know what I'm saying? So it's like we could catch this trend. If this is the next price point where we can anticipate price to reverse, what we can do is go to the leg that we currently made and see if there's any, order blocks, fair value gaps, literally anything. Check on, I like to look for 5 minutes and up. 5 minutes and up. So if I see a 15-minute gap, a 5-minute gap, 30-minute gap, 1 hour gap, 4 hour gap in a downtrend, that's when I start to I need to connect the dots here. Where are we going? So in this case, this would be our gap right here. This little rectangle, that would be our gap. And I'm going to do chart examples as well of this. But just for now, I'm going to show you guys. So, usually, sometimes we are in 1 minute or 5 minute bullish order flow. Okay? So now I'm going to start adding some words. If you don't understand, it's okay. Ask me. But I'm going to start simplifying in other videos. But this is just going to be OP job sauce. OP sauce for y'all. Anyways. Okay. So let's say we are making pretty much this chart example. So we're in a downtrend, as you can see from the sell-off, right? and then we end up coming up, and then this right here, there could be a gap. There could be a bearish gap right here. Let's say this is just a bearish gap right here. Like right there. So the price objective, what price wants to do here, is it wants to grab liquidity to go lower, or grab orders to go lower so they could cash out. So then for them to do that, they have to pretty much fake everyone out in the market. Not everyone, but everyone that's going to lose to them. So how can they fake, how can they fake you out? By having bullish PDRAs get respected. So this could be a 5 minute, gap right here, bullish gap, and we could respect it. Okay, we're going higher, 1 minute, 5 minute bullish order flow. Perfect. Why am I not looking for shorts here when price is right here? And why am I not waiting to take this inversion? Why? Because when price rejects a level, I anticipate it to go either seek out an imbalance or seek out a higher low. And that's just how I trade. So a 5 minutes not enough conviction for me personally to go bullish here. But if this gap was a 4-hour gap, look, this was a 4-hour gap and it wasn't a 5 or 15, I am now interested in longs until that gap. So, because I know it's going to get tapped just because we switched order flow, bullish order flow. But then, you cannot forget. So the trade would look something like this, the long. Oh, shit, my bad. The long would look something like this. Bam. The trade would be about... Alright. Bam, right here. So this is a 1 to 5R. Obviously it's a little off just because it's like, not candlesticks. But I've hit similar trades to this all the time. And I just started documenting them. But you guys will see them. You guys could go to my TikTok. Literally, this is the trade you want to be taking. This long right here. And then what goes on if that was pre-market? And then that was, let's just say that was pre-market and you trade New York, or this happened in London and you want to trade blah, 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 whatever. Once we touch this 4-hour gap, this bearish gap, and I'm still anticipating price to go to that draw that we still haven't gone to. Once we tap that gap, if I get bearish confirmation and I get a change in character, people call it a change of character. I don't care what you call it. But if I look and I see we just tapped the 4-hour gap and we are showing bearish signs, we are inversing to the downside, we are breaking structure on the 5 and 15 minute. I'm like, okay, that could be a nice longer options play. Or you could take the shorter 1 to 5 inversion, right? So let's say we have a 1 to 5 minute inversion right here. Say it was a 3 minute. Say it was a 3 minute. I'm taking that short. I'm taking that short on the inversion and with low risk, because we're already, all right. So the way you see it, or the way you should see it, the way I see it, we are tapping this 4-hour bearish gap, and I still got my draw. And that's pretty much all trading is. So you're going to take your risk, because remember, risk is the most important part about trading. It's not psychology. It's not your strategy. It's your risk. Because your number one job as day traders is to preserve capital. Okay? So do not let one trade throw off your equity curve. You want to just small 1% better every day, And that's how you're going to win in the long game with this trading. Because trading is a business that you could work hard and get the best returns for 10 years straight and blow everything in one day. One day. So you have to have that locked in. That part of psychology is very important. But yeah. So this 4-hour gap, I would want us to just respect it. So even if I had a 45-point stop, even if I had it, minus the points, because I'm going to go on the chart and show you guys real examples. But I would be willing to take this trade. And it would be very high conviction for me. And then if you guys see this optimal trade entry here, this is because if we draw our fib levels, if you draw it from the high that we made, we're most likely to, all right, because that was a bullish move, we have to balance that price range. So let's say we got the inversion, we just ran to that 4-hour gap. We need to balance that price now. So what we're going to do is come down to equilibrium. So I have us at least coming down to here. So if there's a swing high here, like if it goes higher, low, like if there was just a low here, break even there, go break even, and then pretty much it's a risk-free trade, and you're just hoping that this inversion plays out. Because if it doesn't, you get stopped at break even, which is fine. That's literally fine. Go back at it again tomorrow. Or you bang the trade and you start printing. And that's what everyone needs to start doing in 2026. We need to all start printing. Get back in the Discord. Everyone get in the Discord. And yeah, it's time to turn my life around, your guys' life around. Whoever's on this journey with me, I appreciate it. I know all the support, all the love, all the comments, all the likes, all the DMs. I appreciate literally everything. And yeah, I guess I'm gonna go to the charts now. Should I grab a screenshot of this? Hold on. Should I grab a screenshot of this? Let me save this. Here, bam. These are the fibs. And then once you draw, so once we make a high in the gap, it's called an intermediate high or low. I like to draw my fib levels from there. And then once I get a closure, say there's like a leg here. My bad. Say there's a leg like right before the inversion, like this. Once we get this close, you could also enter off of that inversion, and then that close below this level. I like it. And then you can run stops. Swing low or swing high, and then target at that original draw. Or if there's any PDRAs to the left, like say this was a bullish FVG from freaking 5 years ago, target that hoe. Target it. Whatever you could do to get risk off the table and to add money into your equity balance, do it. And that's actually all it is. Yeah, so let me hit the charts and grab the screenshot. My bad, getting sidetracked. Let me just hit DOL. And I'm going to be charging for this soon, but I'm putting this shit on the internet for now. This is our draw on liquidity. Draw on liquidity. Draw on liquidity. Draw on liquidity. On liquidity. On liquidity. This is the draw on liquidity model. This is the draw on liquidity. Liquidity. This is the draw on liquidity model. Am I scaring you guys? My fault, bro. Damn. Alright. So now I'm gonna go over some candlestick examples for you guys. Let me log in real quick. Let me log in, ho. Let me log in, ho. Let me log in. Alright. So yeah. I'm gonna do. Oh yeah. Alright, so now that I showed you guys that liquidy draw, now that I've showed you guys the draw and liquiddity model, now we're gonna get into the candlesticks and the charts. I'm gonna go over candle closures. I'm gonna go over what candles I like, what candles I do not like to enter on. I'm gonna go on where I like to place my stops. I'm gonna go on my risk that I would take for the trade, and yeah, probably not everything in this video. I'm trying to drop super sauce. Should I just drop super sauce? The Liquiddiddy model? Nah, chill. Let me lock in, boy. All right. So let's hit the charts. Still didn't copy this shit, bro. Let me draw my fibs. Let me draw my fibs and shit. Let me draw my fibs and shit. Let me draw my fibs and shit. Let me draw my fibs and shit, buddy. Let me draw my fibs and shit, buddy. Let me draw my fibs and shit, buddy. She want that love, kiss, kiss, kiss. I'm down in the bottom, and get it with me. All right, I had to hit lock in for a second, chat. Copy image. Who wants the screenshot? Oh my god. She want that love, kids, kids, kids. And kick it with me. I'm on charts. All right, bad. Let me log in, boys. Let me log in. All right. So now we're on the charts. Market is open. I'm gonna show you guys example to. Whoa. She want that love, kids, kids, kids. Okay. What do we see on this chart? We are bearish. Wait. Hold on. This shit says open? This shit dropped again? Not chill. Why does it say it's down that much? Oh, does that change at midnight? Okay. Alright. So let me pull up an on-chart example. Let's go to... I took shorts. What was it? Yeah, it looks like it was here. Okay. So, what are we looking first on the candlestick charts. What are we looking for? What am I looking for at least? I am looking for highs and lows and gaps. That's what I'm looking for. And I'm looking for just price action and looking at it move. So look at these hourly. Look at these. Look at that. Look at those highs. Okay. Let's pretend price was right here. So everything to the left of my crosshair. Let's just say that was market open. So let me hit a little bit of market open. Let me hit a little bit of market open. So this is what market open looks like. This is the high we're looking at. Okay. Okay. Perfect. This is literally perfect. This is literally perfect, bro. And it worked. Wow. It worked on both sides too. Wow, that's actually perfect. I mean, I've seen these setups play out as well live. But so if you were to take this pre-market trade, let's go to the 1 hour. All right. What do we see here? What do we see here? We see, what's this? A bullish gap? Okay. Okay. What else do we see? So right now in the hourly, all I see is this bullish gap that got respected at 7 and 8 o'clock. So if I see us put in a bullish gap at 9, I'm going to be bullish. Let me just go to the 5-minute. Bro, like, this shit's annoying, brody. This shit's a brody. Bro, what happened to my chart, bro? Oh, there you go. Bet. Perfect. On Tuesday. Bam. Okay. So, alright. Now that I'm on the charts and the candlesticks, I'm going to show you guys pretty much an example right here. So, coming into market open. Coming to market open. We sweep these highs. This hourly high right here. We sweep them, and how can we tell? We go on the hourly or the 5-minute. It doesn't really matter. But if we see wicks, that is selling pressure building up, and that's how I see it. That is literally how I see it. So now let me go to 3-minute. Nobody's gonna keep doing this shit. Can I trade replay this shit, bro? Well, I could have been to this. No fucking way, dude. No way, dude. Fuck. Alright. Whatever. I'm not scared of this shit. I'm gonna show you guys the real chart examples, boy. I'm gonna show you the real chart examples, boy. You think I'm scared of this shit, boy? You think I'm scared of this shit, boy? Alright. What's going on, chat? A little bit of candlestick work for you guys. A little bit of help on the charts. I know I don't do this a lot, and I actually have a lot of skill when it comes to this. So I'm just going to put you guys on. So this high is to the left of us. It's just a little iffy just because I'm on. Oh, it's right there. Okay. So this is the high that we left. This is previous day high, pretty much. Or just a significant high, I would say. And what do we do when we get there? We print this massive gap. You can mark it out however you want, but I'm going to mark out the whole gap, I would say. I would say that's the whole gap. So once we go inverse here, after hitting this draw, I'm looking for lower. So let's see what we have lower. Tuesday. Let's see what we got lower. Okay, lower. Bet. Perfect. We have. Let's go on the 15-minute. Okay. All right, look. We have this untagged 15-minute gap. Untagged. We've never touched this gap. Perfect. Literally perfect. We could literally just target that off the inversion, off that. I gotta go to Tuesday. Hold on. Let's see what the show was. Sorry. Bet. So that 15-minute could be our draw because we left it. It's a 15-minute gap we never touched. And we inverse this 5 minutes. So let's say we're going to go lower. And then we could also just try to find our entry on the 1 minute. This also works on the 2, 3, 4, 5 minute, whatever. I would draw my fibs from. I would draw my fibs from there to there, and then I would wait for a candle closure below this line right here. I know you guys can't see it, but it's lined up with the gap. This 5 minute, it's lined up. Sometimes it's not lined up, which is okay, but this is perfect. This is like A+, like A++++, the best setup you could ever take, in my opinion. And then, so market comes up. Hold on. Could erase this level, my bad. We do one more sweep. We SMT'd it on ES, so we swept this out on ES. And then for the thing, you could just grab the manipulation leg. So I would go to the lowest low, and I would go to the high. And then that's my fib. That's my fib where I want price to close below. Okay, so we just swept out this draw. Okay, so sweep, come down, hit a bullish gap, just chop, chop, chop until New York open. 5 minute manipulation. We manipulate those highs on the 5 minute. Thursday, Tuesday. Where's Tuesday? Right here. Oh, my bad. 5 minute manipulation. And this trade was a little bit later in the day, but... Or no, right here. 5 minute manipulation. We sweep these highs. Sweep all these 1 minute highs. And then we got the inversion. Damn, bro. This chart work fucking sucks. My ball birdie. My ball birdie. But anyways, this is the trade you guys could have took to this draw. So right when we go inverse on this gap, then you assume lower, and there's LR built up here. Perfect. Go short here. The short could be on this candle closure, and then you could put stop. You could just put like a whatever stop justifies for you, but we could go bam. You could do like a 20-point stop, 25. It doesn't really matter. And then targeting that draw. I think I literally took this trade, which is crazy. And yeah. Remember that higher time frame holds higher power. And let me know any videos I could do. Pretty much like, yeah, guys, just let me know. I'm about to make a couple videos. And yeah, peace.